And day traders in the stock market are a freaking joke. Let me tell you that. You cannot predict whether a stock goes up or down on a day to day or even week to week, month to month, or even year to year basis, okay? There's just no way in knowing how that stock is going to act. Because here's what controls a stock price, it's supply and demand of that stock price, okay? Um, so when the demand for a stock is increasing, as in people are buying the stock and continuously buying the stock more so than they're selling, the stock price will go up. So flip it on its ear, when more people are selling the stock instead of buying, the price goes down. Okay? So that's the demand of the stock. Now, the supply of that stock also affects the price of that stock. If a company decides to do a share split, so basically what that is let's say they initially sold 100 shares, okay, and now they're going to do a 2-to-1 stock split. That means they're going to take those 100 shares back and then give you guys 2 shares for every 1 share that you had, okay? So that's increasing the supply of the stock, and that will drive the stock price down. But in this case, when that stock price comes down, it didn't change your investment. You didn't lose any money because let's say the stock price was at $100 a share and there was 100 shares out and you own one of them. So you have $100. The company does a 2-to-1 stock split, so they take back those 100 shares, they take back your 1 share, and then they'll give you 2, okay? But then the stock price goes in half if they do that 2-to-1 stock split. So then you'll have the new stock price will be $50 per share, but you'll have 2 shares. So you still have 50 times 2, your $100. So that's a way that companies can increase the supply of a stock, which lowers the price, but on that side of the equation, you don't lose any money or the value of it is not changed. So then you can also do a reverse stock split, so a 1-to-2. So you can take shares back 100, say that there's 200 out there, you're going to do a 1-to-2 stock split. So you're going to take back those 200 shares, did I say? And then you'll take back those shares, and then for every 2 shares that those people had, you'll give them 1. But that'll drive the stock price back up to $100 if it was $50. You had $50, 2 shares, $100. Now you have 1 share worth $100, so it doesn't change the value of your investment. So that is pretty much what controls the price of a stock, okay?